Hey, it's Jack from Alpha Charts with a state of the market video. Today is May 27th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. I just want to make you guys aware, if you didn't know, I do have on Twitter at AlphaCharts365 a super follow group. If you're interested in that, right here is the subscribe button. Again, AlphaCharts365 is where it's at. And what does it include? It's $10 a month, and it's basically my goal is to keep people on the right side of the market and the best names possible. It's built for everyone, but if you work full time, it's especially built for you because it's not like a day trading or follow me type of move. It's actually going with the flow of the market. I give Sunday I do a special focus list video where it's very short and about 5 ideas. But then I also go with an extended special stocks to watch that goes over the entire market and has around 25 or 30 setups. Again, it's just to create some idea generation for you guys so you don't have to do the work. I might do a market note on Sunday, a midweek video on Tuesday. On Thursday, I do another market note to keep everybody still kind of engaged on what's been happening. I share my best scan every night. Again, just more idea generation. And it's been an amazing scan, actually. And again, anything I see, charting wise or whatever, I share throughout the week. And that's the minimum, right? I also, I do chart requests. You want to throw me a chart and say, hey, what do you think about this? I'll give you my opinion on it. So that's so you get that kind of direct access as well. It's all for $10. It's pretty cheap. Somebody said, oh, it's like a 6-pack of beer, right? Basically, right? That's all it is. But if you're interested, go check me out at AlphaCharts365 and hit the subscribe button. All right. Thank you for that. Let's get to the charts. So SPX. So we still have this rising wedge. I'm not rising, sorry, this megaphone type pattern. And, so yes, we could draw these lines here. But one thing that we do know right now is that prices is now above that 4,200 area, right? So 4,180 to 4,200 was our area. Price is now above it. Not that that was a magic area, but it was an area of interest, right? And so again, this trend line may offer some kind of resistance, around 4,230 or so. But at the end of the day, price did close above this area and basically made a new closing high, right? High 4,209. Actually, not quite a new closing high. Right? Close. Oh no, it was a new closing high. Okay. So anyway, so I think that's 100% constructive. Not only that, but we have a 200-day it's kind of flattish, but the 50 is rising, the 23 is rising, and the 9-day is rising. So I think that's all extremely constructive, right? Now we still have the RSP, underperforming. This looks a lot different, right? It did well on Friday, but again, it's kind of underperforming and in this rangy area, whatever. And that's there's always some concern there, but we can't trade off of that, right? And looking at the ratio between the two of them, you can see how the mega caps are just outperforming. That's just the way it goes. So what does that mean? Well, I mean, it could mean breadth is not as robust as we like it, but that doesn't mean that the indexes can't keep going up, right? So I think that's the takeaway from that. Let's look at the Qs. I mean, Nvidia on Friday just absolutely beast mode, or was it Thursday? I forget, but it was Thursday and Friday was just absolute beast mode. I mean, almost like parabolic, right? So I expect some backing and filling in here. Who knows how much, but this is very extended now, right? So we know that doesn't really last forever. So I expect back and filling, but overall a constructive look on higher, good volume, nothing crazy. On the week it was up 3.5%. That's really good. And equal weight, let's see what that was up for the week. 1.58. So you see the divergence there as well. Now, the equal weight, this $74 level, to me, that is a very important level. So we're bumping up against it again, right? Here we are bumping up against it, bumping up against it. So again, it was a strong move. Maybe we do get some backing and filling on equal weight as well. But if we get above $74, that's going to be a positive overall for the market. That's a big deal, I think. Looking at IWM, the weakest of the bunch, but it did close now above these moving averages, but it's been really choppy in a range overall, I think. 200-day moving average is still declining, so we don't love that. So we'd love to see this above 181, above that 200-day, right? It would break out of this area, break above the 200-day, and things would start to, I think, show healing, right? That's what we want to see, a breakdown below 164, 165. And I think that's a problem. Right now, we're in this mishmash range, which says mid caps are more of an avoid than anything else. And I'm sorry, that was small caps. And the mid caps are literally the same chart, right? Looks almost exactly the same, So this trend line so far is holding. I think that's a positive. If this trend line breaks, I think it's very likely we test, this 400 level in mid caps. So overall, I think the cap weight indexes are still doing very well, and equal weights are showing some improvement, right? So that's progress, and so that's not bad. Let's look at the sectors. Looking at the sectors, again, XLF is still weak as hell, but held that $29, $30 level, right? We call it $30. So it never came back and retested this low, never, went below $30. So that's a positive. Now it's still trapped under the 200-day. Technically, it's trapped under its 50-day and its 23-day. So I'm not saying it's not going to break, but it hasn't yet. So that's going to be okay. We're still in the positive territory. We get down here, and that is territory, right? So we're not quite there yet. Again, it's just kind of this choppy, nasty. It is making lower highs, right? We'll see if it makes a lower low from here or not. But it hasn't broken down. That's my positive spin on it, right? XSD, this is semiconductors, equal weight, giant move. Nvidia had earnings and blew everything out of the water, and the entire sector did well from that, right? Just a massive move, was over 10%, I think, for the week. 8.68 for the week. That follows another 8.63. So this has moved almost 17% over 2 weeks. Pretty amazing move, to be honest, off the bottom right there. Because right here, that was bear flaggish, right? Right. But it never confirmed. And instead of, if you do this and say, oh, it's a bear flag, right? But never broke down, never confirmed. It actually did the opposite. And we had from just a fantastic move higher. And this is on the semiconductor, equal weight semiconductors. And when we look at the cap weighted, where NVIDIA is going to have a greater role in it, you can see just just straight up move. It was up 10%. And the week prior, it was up 8%. So 18, 19% in 2 weeks. Super strong. All-time highs are there. Obviously, this is now, extended as hell. But again, that's a positive thing, right? So yes, it may back and fill some, no problem. But that looks good. Semiconductors look great. That's huge, positive, I think, for the market. Transports, kind of muddled. Looks more like the small caps, right? Yes, it's above all its moving averages, but there's no clear path one way or the other. Just very nasty, choppy action in transports. And home builders, which were the one leading positive, have kind of pulled back some. Again, expected area, so they have not fallen apart. Again, that's positive. So when we look at the sectors, we say, okay, they're not falling apart, and semiconductors are leading. That's not bad, right? That's not a bad place to be. If we start seeing them fall apart, that changes our ideas, but as of right now, our thesis is still intact, which means that they're not falling apart, and we have semiconductors, the most important of the bunch, leaving. That's great. Let's look at the internals. Just clear off this chart real fast. All right, let's see the VIX. VIX is just in this range, right? Every time it gets a little bit extreme, we get that little bit of bounce back, but it doesn't last very long. And then it comes right back in, right? So kind of like this area in here, right? People were pretty bearish back here. Actually, were they bearish back here? 2021? No, they weren't actually. I lied. But either way, it looks like this type of action, right? We get low, it bounces some. We get low, it bounces some. We get low, it bounces some. And so this could go on for a while, right? So yeah, now it's coming back in, and I think overall, as long as it stays in this general range, fairly constructive. HYG credit spreads have not, they're again in a range, have not broken to one side or the other yet. So I think yeah, I mean, it's that we're looking for extreme moves, and we're not getting them, right? Neither one, VIX nor credit spreads, have any type of extreme move. Maybe that changes, maybe the debt ceiling stuff, maybe who knows what can cause it, but we don't see it yet. Looking at put call ratio, you know what? I mean, erring on the side of bullish, but nothing, again, extreme at all. We have, potential room to go to get to the orange line, and that's where I'd go. Things are pretty extreme. And then looking at the percent stocks above the 50-day moving average, you see we got above 50, rolled over, but made another higher low. So again, constructive work on breadth, not robust, but constructive. And again, I guess that's the positive takeaway there. Now, the dollar index is at 104 DXY. That is obviously a little bit concerning. I think above 104, and if we make a higher high, then that could put some pressure on stocks. It's definitely a chart I'm watching. Maybe, as far as the negative charts, this is the one that would be the most worrisome charts, I should say. Looking at the copper gold ratio. So we have the breakdown into this area, and now we're going to get a retest, or getting a retest of the breakdown. So question is, does this roll back over and then I'd get much more concerned, or does this break back above it and this is like a whoopsie false breakdown and we rip to higher? That's really the big question. So as far as caution goes, I'm watching this and the dollar. And again, it's kind of going to go hand in hand, I think, for to whether to get more cautious or more aggressive in the market. And so let's just kind of wrap it all up and see what. So basically, very constructive on the index level. Semiconductors are really starting to lead. Things have gotten stretched to the upside in the technology sector. So I think that is so I wouldn't plow into technology names and until things settle down a little bit. But it's constructive. We're not seeing robust breadth movements, but it's improving slightly. I like that. I really would love to see small caps start to participate a little bit more. I'm watching the dollar and the copper gold ratio. But overall, constructive price action. Can't say anything but that. And there's no signs in the internals that the market's about to fall apart. So we'll see. Anyway, so I'm constructive on this week. Getting good entries is probably the most important thing you can do. So get those good entries. Don't settle. Get good entries. And don't forget, at AlphaCharts365 on Twitter if you're interested in the Super Follow group. Hope you all are doing well. Take care.